This video is brought to you by me. Check out the amazing programs linked down below. Get 39% off using the expiring coupon code. You get private live streams with me and endless lectures on deep educational content on stocks, real estate, do-it-yourself property management, rental renovations, YouTube, sales, you name it. There's something for you. Check it out down below. Also, towards the end of the video, I will reveal one of my favorite options as of late, and it's one that I still think has a lot of play left in it. Hey everyone, me Kevin here. It seems like we are at peak doo-doo. Think about all of the doo-doo that's going on in the market right now. We've got Biden leaking a capital gains tax hike that tanked markets today. We've got crypto falling. Ethereum gave up all of its gains. Doge is around 26 cents at the moment, also falling. And Bitcoin has fallen to under $52,000 per coin. We, at the same time, have had a SPAC attack in the last few weeks. We've had a lot of hedge funds start shorting the market, which takes away buying pressure and adds to selling pressure. We've had the rate of margin usage growth falling, basically meaning people are taking on less debt to buy stocks, despite prices of stocks having adjusted downwards a little bit in many different sectors. In some cases, a lot. Like if you look at NEO, a lot. You look at SPACs, a lot. If you look at Whirlpool, still doing pretty decently. But anyway, on top of that, you've also got massive and insane FUD around one of the S&P's biggest, latest additions, Tesla. And folks, we are pretty much 2 months and 3 days into this crazy market sell-off. Now, if you're just investing in index funds, you don't know about a sell-off. If you're investing in tech or high multiple stocks or SPACs, you know all too well about this sell-off going on. But why did even the indices sell off today? Well, obviously, indices and the stock market broadly, despite trying to recover, failed to recover after Joe Biden had leaked through the media channels that they do at the White House the likelihood of a very large tax hike for millionaires, people making over $1 million, which that does include hedge funds and advisors or analysts or any kind of Wall Street firms making over $1 million Wall Street individuals making over $1 million, and that promptly led to a lot of profit taking and selling. Because here's what happens. Taxes go up, profits on your stock gains go down, and so people are incentivized to sell. Most people presently believe that there's pretty much no way that this tax hike is going to be retroactive for 2021. So for right now, we'll say 90% chance this is going to be a 2022 tax raise and not a 2021 implication, which means if you want to take advantage of lower tax rates in 2021, if this passes, you're really incentivized to sell. And so we might be seeing a lot of that, especially at a lot of stocks that have had big gains since the pandemic. So some of our favorite high valuation and high gain stocks over the last year could come under some substantial pressure. On top of this tax hike burden, we've got a cryptocurrency sell-off that is not immune to this tax hike. I mean, in some cases, not taxing gains in stocks for millionaires as a capital gain, which is what the change would be, leading to a tax rate of just over 39.6%, plus Obama's 3.8% tax, leading to an over 40% tax rate for millionaires on capital gains. No more long or short-term capital gains, just a large tax rate. It's a problem. This also affects crypto. Folks think, oh, well, come on, crypto's unregulated. Not true. Crypto is already pretty substantially regulated. You want to issue a coin? You better be licensed as a money service provider. You want to have a crypto brokerage? You better be licensed in every state. Why do you think certain platforms like BlockFi can't do anything in New York? Because they're not licensed yet. They're regulated. Why do you think the IRS is starting to make it very clear that gains and interest on Bitcoin is taxable, and they're starting to make brokerages report your wallet addresses to the IRS so that the IRS can collect their tendies from you? Folks, one of the reasons crypto is also selling off is because, just like I said, high multiple and high gaining stocks might sell off in this tax hike drama. Crypto is obviously also something that has gained substantially, not just over the last year, but even over just the last 4 months. Ethereum was under $700 just 4 months ago. Heck, it was under $600 not too long ago. Anyway, that's a big problem. On top of that, you got the SPAC attack, which SPACs barely got recovery. They barely got a breather yesterday. Yesterday, the market had a really nice breather from some advanced, or I should say heightened volatility that we had on Tuesday. That volatility fell substantially yesterday. We saw a very green market. SPACs recovered very, very nicely, and they gave back a substantial amount of their gains today. Maybe not all of them. Some of them ended the day flat, slightly up. Some of them ended down another 5 to 10%. It's a brutal period of time. And nothing has changed. Hedge funds are still shorting, except now hedge funds, in addition to maybe shorting, are also taking on potentially less debt, but potential because of the Archegos drama, right? But then also potentially taking some additional profits to make sure they can realize a lower tax rate at higher tendy prices before the rest of the market takes advantage of this tax break millionaires are now getting for selling stocks this year. Think about it. Raising the taxes next year on selling stocks for millionaires is basically telling millionaires you get just this year to get a sweet tax break when you go sell stocks, because otherwise it's gone next year. It's going to lead to a lot of selling. Now, that hopefully that selling will turn into an additional amount of buying. But combine this just with the drama that is going on right now in markets of all of this coming together at the same time. Tax rates going up, hedge funds shorting, the rate of margin growth falling, people taking on less debt for stocks, the SPAC attack, crypto falling, the Coinbase failure, Tesla FUD over people doing stupid things in their cars, or Consumer Reports saying, hey, if you dangle a chain from the steering wheel, you can actually turn the car on autopilot, turn it on, climb out of the driver's seat, get in the passenger seat, and the car will drive itself without anyone in the driver's seat. Good job, Consumer Reports. You have just taught people how to be a complete idiot while driving a Tesla. And it just leads to more and more Tesla FUD. Tesla's a big member of the S&P 500. Tesla sells off, S&P 500 gets weighted down. It's a pretty big weight in the S&P 500. Folks, all of this is happening at the same time. And this is where I want to draw some conclusions and talk strategy going forward. So here's the thing. Short of going through all of the nitty-gritty, which we've done before in other videos, let's just understand the conclusion. The conclusion for me is we're still going to go through probably 2 months of blood and pain in this market. I hope I'm wrong. I want this market to recover sooner. But what we need is clarity. And that's the last thing we have right now. We don't know if this tax rate is going to go through. We don't know if Joe Manchin is going to stop it. We don't know if a $4 trillion infrastructure plan is going to get through, a $2 trillion infrastructure plan, or the Republicans' $500 to $600 billion infrastructure plan. We have no freaking idea. Uncertainty is bad for the markets. You want to feel uncertainty? Look at the markets 2 weeks prior to the election. Look at my videos 2 weeks prior to the election. 2 weeks prior to the election, I said I am plowing money into stocks because we are at peak uncertainty. And when we hit peak uncertainty, once we actually get that clarity, stocks tend to go up. Folks, with the election, I was spot on. Once the election happened, we as a society had certainty. Those who were happy had certainty. Those who were unhappy had certainty. The decision was done, and stocks rallied for 3 months. What do we have right now, folks? Fear, uncertainty, and doubt about America. And when America has fear, uncertainty, and doubt, it's usually short-lived. We usually break out of fear, uncertainty, and doubt. Because let me give you some examples of the certainty that we're going to be looking for as catalysts over the next, not just maybe 2 months, but over the next 2 to 6 months. This horizon extends to September, October, in my opinion. Here's what we got coming. First, over the next 6 months, we will know how big the infrastructure plan is. We will know how big the tax rate hike is going to be. We will know if Joe Biden is just negotiating high to come in low later. We will know the exact details. Will it be as bad as we think, or is it just not going to happen at all? Maybe the parliamentarian in the Senate comes out and says, we can't do that. We can't change tax rates on capital gains. You can't do that as budget recon. We have no idea. We have no idea what they're going to say yet. Uncertainty leads the market to go down. Clarity historically leads the market to go up, even if that clarity ends up being bad clarity. But what else do we have? So we know infrastructure, or we will know about infrastructure in the next 6 months. We will know about inflation in the next 6 months. We'll know, are we continuing the trend up? Which right now we're on the trend up. We're seeing inflation, we're on the trend up, prices are going up. Will that trend continue in 6 months, or will we start leveling off, slowing down, and seeing inflation rotate downwards? And I actually mean everything. Lumber prices, are we going to see stability? Stability in chips. Are we going to see stability in the housing market? Are we going to see stability in the autos market, where there are a lot of shortages right now? Once we see stability in supply chains, and we see inflation trend down, and we see the infrastructure plan happen, and we know what happens with the tax hikes, and the crypto market stabilizes after the disaster of the Coinbase DPO, and the SPAC attack ends because the SPACs start actually producing products, and the hedgies, as they start realizing this happening, these catalysts coming out, stop shorting the market. And maybe people start taking on margin debt again. And we get answers on all the Tesla FUD that's been coming out. Guess what happens? Because all of these answers, I guarantee you, we will be getting those answers in the next 6 months. None of these I'm concerned about us having answers on. We will know, are SPACs just going to be in the toilet? Or is the SEC, the new SEC chairperson, going to re-regulate them and make them redisclose? We'll know what the earnings have been for the next 2 quarters. All right, or this quarter and next quarter, because we're still going through earnings for Q1. We'll know Q1, Q2, and we'll start knowing Q3. We will have so much more certainty over the next 6 months. Right now, folks, we are in a period of peak doo-doo, peak uncertainty. And peak uncertainty can take a while to to evaporate. Unlike the election, where the election we knew November 4th, okay, maybe a few days more if there's a contested election. But we knew the end was going to come. Right now, we know the end will come for all of these issues. The SPAC attack, the shorting, the margin issue, the Tesla FUD, the crypto issues, the crypto FUD that's circulating on Twitter, including unsubstantiated tweets about Janet Yellen wanting to raise tax rates on crypto to 80%. It's FUD. It's FUD. We'll know the infrastructure. We'll know the tax rates. We'll have all of the certainty, my expectation, and we'll know about inflation within the next 6 months. When we have clarity on all of these issues, be it good clarity or bad clarity, just getting clarity, this market should be in a substantially better place. So if you are feeling pained and you're thinking, I want to sit this market out, fine. But realize as those catalysts start coming in, I expect this market to move to the upside. Now, earlier, I promised that I would reveal an option that has been doing really, really well for me. I just bought this option 2 days ago, and this is an option in a particular stock that has gotten way, way, way beat down, and I think it is going to do very, very well over the next 2 years, especially as we get more into green energy, which is exactly one of the things Biden is pushing for, especially with his announcement of trying to get carbon emissions down 50% by 2030. Which is an even more ambitious goal than the Paris Climate Accord agreement that was signed in 2015 with the United States. Folks, I'm going to pull it up on screen here. Here it is. This is my Tendi option so far. I have a $503,000 in market value of options in Enphase 150 options. January 20th to 2023. Enphase has had a nice recovery over the past few days. This option contract is up $87,000. Of all of the options that I bought on Tuesday, this is one of the best performers. Tesla is pretty much break even right now, but I will give you a bonus one as well that is doing very, very well. Which, keep in mind, every time I buy an option or a share or I sell something, I close something, I mention it to all of my course members. Take a look at this other one. Here's another Tendi printer. This one's got a market value of $147,000. It is up 18%. It's the Lemonade in the money $50 January 23 call options. These have been very, very juicy over the last couple days. I will tell you, I'll give you a loser as well. So those have been a couple of the winners. Let's go for a loser. Let's see here. So Teslas are very small losers. Pinterest has been okay. Those are good. Palantir's actually been good. Coinbase. Coinbase. Okay, we'll pull up Coinbase. So unfortunately, with crypto selling off and this whole tax crap going on, hasn't been helping crypto a lot, and Coinbase has been suffering. My Coinbase 320 option, which was slightly out of the money, and yes, Coinbase is doing options. This one cost me $122,000. It is currently down $17,000. 12 call options here. Not a surprise given that Coinbase is sitting under under $300 a share right now. But yeah, this was definitely one of the ones that got hurt. I think everybody really, I think the market really misread Coinbase. I'm still optimistic on the company. Don't get me wrong. I wouldn't have bought calls on it on Tuesday worth $122,000 worth of call options on Tuesday if I wasn't optimistic in Coinbase. I'm still very optimistic in Coinbase. I am very excited to see their other revenues explode, not just transaction revenue, and so I still believe in my fundamental analysis. Obviously, the pricing is the purchase prices are way lower than and our future value prices, which we did in our Coinbase analysis, they still hold true in my opinion. It just means we're getting a lower entry price right now, and unfortunately, that lower entry price keeps getting lower. It's the dip that keeps dipping. But I did promise you some options, so I wanted to give you those here. As we start getting clarity, as our vision stops blurring, as the rain clears, I believe this market is going to turn. I'm very happy with the decisions that I've been making in my portfolio to bet on this recovery. But we have known that we would go through inflation doo-doo for a long time. We've just had a whole lot of extra doo-doo thrown on top of this. It's all culminating right now. Think about how much fear there is right now. It makes sense that high-value companies are selling off. It makes sense that SPACs are selling off. It makes sense. But that sell-off won't last, especially as we continue to see recovery stock-related earnings coming in, maybe not as great as expected. Sure, BJ's had a beat today, but we're not seeing all of the love that we'd like to see, especially in the airline and travel sector. We'd like to see that recovery advance more. We'd like to see COVID get better faster globally. But as we get through these catalysts, I have no doubt in my mind that the 6 months after the next 6 months will be a lot more clear and a lot more beautiful. And don't get me wrong, there'll be FUD and there'll be new issues that we'll have to deal with. But right now, ask yourself, does it feel like we're at peak uncertainty? And I'll tell you, it feels like we're definitely in a lot of uncertainty. I don't know how much more uncertainty we could actually get. We'll see. We've had a lot. We'll see if there could be more, but I'm prepared because I'm ready for the clarity to come. And these are potentially the times that you've got to ask yourself, is now the time to double down on my long bets, to double down on those shares that I know I want to hold for 10 years no matter what. Be careful with options. Options on this kind of strategy, like getting 2023 call options, it's kind of YOLO, right? Getting July, August, September, October, November, December options, those are YOLOs. Those are kind of YOLOs right now. We're making bets that we're going to get that clarity. I'm confident it's going to come, but I do believe we're going to be going through and we're going to get drugged through the dirt for the next 6 months. At most the next 6 months. But certainly the next 2 months, I think we're going through the dirt some more. It's going to be rough. Appreciate you being here, supporting the channel. Stay strong. It's not your picks. It's the lack of clarity over the entire market. Thanks for watching, folks. We'll see you in the next video. By the way, if you like my perspective, check out the programs down below. Use that coupon code expiring sometime probably at the end of this month. Thank you so much for watching, and folks, we'll see you soon.